Welcome back to another episode of Policy and Profits. I'm EJ Antoni, joined by the one, the only Anthony Esposito. Anthony, how are you doing this week?
EJ, we're doing okay. Winning at life, as I like to say. There's definitely a dark cloud over the country with all of the social issues and uprisings and craziness and that's going on. But as far as markets go, as far as the fundraise for the fund, as far as all the things, and everything's okay. The numbers have gotten a little. I'm seeing a lot of cross currents now in the economic releases, what the numbers look like, what the market's doing. There's a lot of, I guess the best way to say it is cross currents. We're getting signals heading in different directions. I don't know where they average out, but one of those signals, and one thing that we've looked at that you were out on this week, we were looking at inflation this week. We had the CPI numbers out that were out a little light, which was good. PPI out today, again, a little light, which was good. But you had put a pretty interesting chart out on X. I want to bring that up and go through your description here of these CPI numbers and inflation. Where are we headed now? Nothing looking forward, just where have we been, where are we now? And then we can kind of speculate on what the next steps are.
Sure. So this year has been a tremendous departure, and I think you can really see it in this graph when you look at the different colors of the line segments, even though it's all the same line. What we're looking at here is just the consumer price index, which we use obviously to measure inflation. And you can see the first section in green, that's the entire economic expansion from when the Great Recession officially ends, which would be June of 2009, all the way to the end of 2020. So really it goes until January of 2021. So basically for that entire economic expansion until Biden. And yes, I understand we have the 2-month recession of COVID, which was severe, but then everything just gets right back on track. I mean, within 4 months, I think the CPI is right back to its trend. So the idea that there was any kind of real significant deviation there, the numbers just don't show it. But then as soon as Biden goes on his massive spending spree, Biden and Congress, inflation immediately starts picking up. So what we see before Biden is the CPI has an annualized rate of 1.8%. And yeah, sometimes it's a little faster, sometimes it's a little slower. Under Biden, it jumps almost immediately to an 8.6% annualized rate. And what's really amazing is how tightly it stays on that trend. You don't have the significant deviations up or down that you saw during the previous years. Yeah. Then after we get through the first 18 months of Biden, you get into this 30-month period where inflation cools significantly, but it's still running at a 3.1% annualized rate. So that's still pretty darn hot. Not as bad as 8.6, obviously, but that's still bad. If you look at how quickly our price is going to double, I mean, every generation essentially. So again, still bad numbers. This year, ever since January when Trump took over, the numbers have been remarkably good. We're running at an annualized rate of 1.4% during Trump's second term. That's phenomenal. I mean, not only is it obviously way less than Biden, either the fast initial period or the slightly less fast second period, but it's even way less than that long run average that we saw before Biden took over. And I mean, this is only 4 months and he's already managed to slam the brakes on inflation. That's phenomenal news. And I think it's a key reason why a lot of people are now pricing in a couple of rate cuts this year. I'm not sure we're going to get them because of the animosity between the Fed and Trump. But still, I think, again, it speaks to just how well we are doing on the inflation front right now.
And so that's all great news for the economy. And it is, if you look, I always love how the talking heads in the media are still talking about the fact that prices are still high. Yeah. I guess they need a lesson on what the inflation rate and prices are to kind of, they've been confused the entire time. Just they take a different line of confusion depending on who's in office. But if we look at the biggest reasons why we've seen the rate of inflation drop just in the last 4 months, would you put energy and energy cost or the price of energy at the top of the list there, or what is it that's driving these CPI numbers lower? Really, in like you said, in the first 4 months of Trump's term, what has he done, and what is pushing it down?
Anthony, if energy is not number one, it's got to be in at least the top three. Energy prices, if you look at like within the CPI, just the energy price component, that's down about 2.5% under Trump. So we're not in that case, we're not just talking about inflation coming down. We're talking about it flipping negative, right? You're talking about not just disinflation, but deflation. So prices are not only going up slower, they're actually going down in that sector. And obviously, as you know, energy affects the price of everything you do and everything you buy. So that's putting downward pressure on prices throughout the economy. That's great news. If that's not number one, up there has to be then something like the reduction in government spending, which is rising nowhere near as fast as it used to. In fact, government, at least direct purchases, so that doesn't include transfer payments like welfare, but if you just look at direct purchases by government, those fell in the first quarter compared to the fourth quarter of 2020. Part of that's because of the great work of the guys at Doge. So, there's a lot of things that are moving in the right direction, I would say. But to your point on those cross currents, even though the CPI and then also the PPI, the producer price index that measures wholesale inflation, both of those numbers have been fabulous this year. Since January, the PPI is actually flat. It hasn't gone up at all. It's down like a hundredth of a percent or something like that, less than a tenth of a percent. So it's basically flat. Despite both the CPI and PPI numbers looking really, really good right now, when we look at some other metrics, it does look like inflation is rearing its head again. That would include things like purchasing manager indexes. ISM puts one of those out. S&P Global publishes another one. When we look at the regional Federal Reserve Bank surveys, both on the manufacturing side and then also on the service sector side, you see an increasing number of firms reporting price increases. So it is odd that we're seeing some of the data, particularly those soft data, you might call it, show increasing fears about inflation and increasingly showing inflation actually showing up. But then when we look at the official hard data, we're not finding it. So speaks to your point, I think, Anthony, on the confusion here where we have these cross currents.
Yeah. Interesting. Then we move forward. So the Fed, I was out with a guy last night from a very large hedge fund, really sharp guy. And, we're right back to the Fed funds rate conversation. So if we move forward, we start to look at how Powell and Trump and the Fed and rates are going to kind of play into this whole thing. Because it's a mosaic, right? Like whether it's the economy, whether it's the markets, and then there's a mosaic to the economy, there's a mosaic to the market, and then the market and the economy are part of a larger mosaic where they kind of fit. So it's kind of like, this 4-dimensional puzzle that we're trying to put together or put back together. This is the Fed calendar for the balance of the year. So for the full year 25, we're through 3 meetings already. The May meeting is done. June 18, we have another meeting coming up. Right now, the expectation for me is, first of all, Powell is politicized. That's just already been determined. If you're looking at Powell's actions versus his actions under Trump versus his actions under Biden, what he says and what he does, whether it's raising rates in 2018 into a low inflation, high employment and high growth economy, there was no reason to be doing that. Whether it was kind of getting caught off balance and creating a regional banking crisis in 21 into 22 by then jacking up rates, whether it was, cutting rates 50 bips heading into an election when there was really no reason to do that at that point, or having this little sparring session with Trump. And you can blame Trump all you want, but Trump has some really good points. And then we can go into the illegal payments that are being made by the Fed, or the fact that the Fed continues, which you've been pounding the table on. The Fed is continuing to lose money. If we look at this calendar, at dinner last night, same topics come up. So we're talking about a lot of things with the market, with the industry, but it's if guys on the street are just looking forward to the Fed cutting rates. And the idea is if the Fed cuts rates, the market's going to continue to rally. I get the theory behind it. I get the thought. I get the shiny ball and all the things. But to me, it just seems like we're not going to see a Fed very willing to cut rates here at least, multiple times this year. I just don't see it. I know why we need to forget the markets and all, but as far as the economy and as far as the debt and the interest payments that we're making on the debt, we do need rates to go down here. That is part of the problem. One thing that can happen to help that would be the Fed cutting rates. Do you see it happening? I mean, do you see Powell? Let's focus on Powell and Trump. Do you see Powell cutting rates anytime in the near future? And if not, what event or what series of events could you imagine would push him to cut rates?
Look, just looking at what we have right now, Anthony, I don't see how he would cut rates. I'm not saying he should or shouldn't. I'm just saying, given given what we've seen so far, I just don't think it's in the cards. I mean, this honestly, Anthony, what it reminds me of is going all the way back to last year when you and I were talking after the Fed's first meeting, and they obviously didn't cut rates in the first meeting last year. And then we're looking at what the market's pricing in. It was pricing in 7 cuts. In other words, a cut every single meeting for the rest of 2024. And obviously it didn't happen until we got to, right before the election. And they did that emergency rate cut. But even still, even if you want to break up that jumbo-sized rate cut of 50 basis points into 225s, that still means you only had 4 of those 25 basis point cuts for the entirety of the year, and you had to wait until the very end of the year to get them.
Yeah.
And so this whole idea that markets are pricing it in, so we pretty much know it's going to happen, I beg to differ. I mean, there is so much animosity between the Federal Reserve and President Trump. I mean, there tends to be animosity between the Fed and Republicans to begin with, because almost everyone who works at the Fed is a Democrat. If you look at their political campaign contributions, they give exclusively to Democrats. I mean, it's literally over 90% of them.
Yeah.
Again, this whole idea that we can expect the Fed to cut rates, I'm sorry, I just don't see it. If they really were, what's the phrase they use? Data dependent, right? If they really were data dependent, if they really actually used the Keynesian models for which they're constantly advocating, there's more justification to cut rates today than there was in the fall.
Exactly.
Whether you're talking the unemployment rate, the inflation rate, you can look at other labor market indicators like JOLTS, for example, the job opening labor turnover survey. There are all kinds of measures we can look at. You can look at GDP, and all of the indicators, literally all of them, say there's more justification to cut right now than there was last fall, than there was a little over 6 months ago.
Yeah.
And yet here we
as
are.
Powell says, I don't see a reason to do anything. We're sitting on our hands. We're data dependent now. So, your point is the point, and it really is. It's gross, to be honest with you, the way Powell is running the Fed.
Sure.
The Fed speak and Powell's actions are really beyond irresponsible. And we've been saying this for well over a year, probably since we started the podcast. I think our first episode might have been like, poo Powell was the beginning. But granted, we had 2 easy targets. We had Powell, and then we had Yellen at the Treasury, which are, 2 pathetic creatures. But I agree with you 100%. And you said it perfectly. There is a much better case to cut rates now than there was in September, yet Powell's not willing to cut rates now. Hard stop. It's not, this is not, the facts are out, and it shows that Powell just can't manage himself objectively, which he should be doing. He has a mandate, rates, inflation, and employment, and he needs to stick to those mandates. This is the same guy that was starting to talk about DEI and the ozone and carbon dioxide in hearings on the Hill. Like, I don't care what you think about the ozone. I honestly, I don't care what you think about DEI. I care what you think about prices and employment. That's it.
And Anthony, if I may, I would go one step further, because it wasn't just a matter of him talking about the stuff on the Hill. It was a matter of the Fed introducing this green energy garbage and this DEI garbage into their stress testing for banks. I mean, that's obscene. Yeah. This is basically the exact same thing as a bank to an individual saying, you know what, we're going to ding your credit score because you're white. You're a white male. We're going to ding it even more. You're a white Christian male. Oh, buddy, don't even apply for a loan. That's the equivalent of what's happening.
Yeah,
or what did happen, I should say.
Yeah, the shift that was stopped. I don't think we fully understand the. We were looking at the tip of an iceberg, and I don't think anyone fully understands what was beneath the surface. If President Trump had not won, we'd
Yeah.
be looking at a very different situation across the board. Forget the uprisings and the violence that we're seeing right now. This would be a major, major issue sweeping the country, which I'm not saying it's not now, but at least there is a firewall in place. I personally would like to see President Trump and the National Guard and the military shut this down right now, hardcore. But
Yeah.
um, part
100%.
of the issue I have with Powell and Yellen, in addition, is this manipulation of our economics and our finances and our balance sheet. Is a really quick rabbit hole is the CBDC, this central bank digital currency. And I do believe that President Trump's push into Bitcoin and into cryptos was not, it wasn't so much a push into cryptos as it was also a push away from a CBDC, because you talk about a way for government to control its citizens. That is a dynamically changing crypto digital currency. It is government built. It is government controlled. They can do things with that, like if you've spent over 10% of your income on fossil fuels, they can dynamically increase your tax 50% on anything else you buy at the pump. I mean,
Exactly.
literally, these are the things. They can control the velocity of money. They can control inflation. They can control your taxes on the fly. And
Right.
this was kind of part of their whole plan. And you can see when our Fed chair is starting to implement DEI initiatives in their stress test, there was a lot more going on there, in my opinion, than people even understood. So we
Yeah.
dodged a bullet. We need to keep, kind of weaving and dodging, because the bullets are going to keep flying, and we need to stay on top. Powell, I think it's fair to say anyone that listens to this podcast or has the conversation with us or reads any of what we put out, we're not fans of Powell. There was now this kind of note yesterday, or this thought yesterday or the day before, that potentially Besant would be recycled and then head to the Fed. So here's one of our visuals. Besant emerges as a possible contender to succeed Fed's Powell. Now, the market rallies on this. So why does the market rally on this? Well, Powell's incompetent, first of all. And the
Hmm.
idea is that Besant is aligned with Trump and their view of how to get us out of this deep hole that's been dug. And that would include lowering the Fed funds rate, which would in effect create lower rates across the board, which would in effect prop the market up. So we got a bit of a rally, or a rally and a hold. We're still sitting around the 6,000, 6,050 level in the
Sure.
S&P, which is just off the peak. But this definitely was a little bit more of a put under the market. Correct me if I'm wrong, but the last Secretary of Treasury to leave midterm, or the last time that happened was under Clinton. Is that right? And it was
That sounds right. I'm
Larry
thinking
Summers,
to.
I think, came in
Hmm.
as the
Hmm.
Secretary of Treasury at that point. So here's Larry Summers. I forgive, I actually want to apologize. That's actually the best picture I could find of him. So my apologies, mostly to Mrs. Summers, but so
Oh.
Larry Summers, who came in at that time, was a midterm Secretary of Treasury. Do you think, all kidding aside, do you think Besant coming in, do you think that's even possible? I'll get off the jokes. Do you think it's even possible for Besant to make that move? And who do you think would step in? Do you have any thoughts on who would even step in as the Secretary of Treasury if Besant did go in and remove Powell? Which Trump, by the way, this morning said during his presser that he was not removing Powell, but we know how things may change. So do you think they can do that? Do you think they would? And who do you think may step in?
Well, I know who would like to step in. My friends in the admin tell me that Lutnick is still lobbying hard for that position. For those who don't know, he was lobbying hard, but before the administration even started on the transition team, he was trying to get the Treasury Secretary job. Obviously, he didn't. Bessent got that, and I think part of the reason why Scott Bessent got it was because he never asked for it. You know, the president already knew his how accomplished he was in terms of debt markets and everything.
Yeah.
And he essentially, when he was asked to come in to interview for the job, he did. And
Yeah.
then he never talked about it ever again after that. And it was that kind of calm, cool, collected demeanor that he still has today every time he goes and testifies before Congress.
Yeah.
That always helps to calm the markets down.
Yeah.
That I think really won him the job, whereas Lutnick apparently just kept hounding Trump. My folks at Mar-a-Lago were telling me he just would not stop basically asking for the job. And eventually the president had enough of it. So today, fast forward, Lutnick still really, really wants to be Treasury Secretary, and would be more than happy to see Bessent go to the Fed. Now, do I think Bessent would do a good job at the Fed? Sure. Would he be my first pick? Honestly, probably Judy Shelton would be.
Okay.
But whatever the case, part of the problem with Bessent leaving the Treasury right now is just the fact that we can't reverse a lot of the damage that Yellen did.
Yeah.
The reason being is that yields on treasuries are still too high.
Yeah.
So basically and we've talked about this a bunch of episodes, so I'll just give a real quick recap. What Yellen was doing was taking very long-term debt, so maturities of 20 or 30 years, the bonds essentially, and turning them all into treasury bills.
Yeah.
And what that did is, it basically countered a lot of the quantitative tightening that the Fed was doing in 23 and 24. But we're now stuck with a situation where this debt is rolling over at least once a year, because the longest maturity on a bill is only 52 weeks. And a lot of it's rolling over more than once a year because of how short the maturity is. So Bessent can't just flip all those back to bonds, because if he does, he's going to lock in that debt at 5% for 20 to 30 years.
Yeah.
So now he's basically got to keep playing this game until we can get yields down a bit, and then he can go and lock in the debt. So I don't want to lose Bessent, is what I'm saying.
Okay.
Because we need the world's best bond salesman, which I think he is. He's certainly managing the biggest bond sale ever right now. Yeah. We need him in that job, I think, for the rest of Trump's term. Maybe even into a term with J.D. Vance, if that happens.
Okay. And quick, who is Judy Shelton, you said?
Yeah, Judy Shelton was actually nominated by Trump to serve, not be Fed chair, but to serve on the board of governors. Okay. And unfortunately, Mitt Romney ended up sinking her candidacy. Without that, she probably would have gotten appointed. Or it might have been 50-50 in the Senate, but it would have been either a yes vote, or it would have been darn close to it. Okay. But again, unfortunately, Mitt Romney sunk her candidacy. She's a big believer, though, in rules-based monetary policy. So not this discretionary nonsense where, like Powell, for example, in the fall, right before an election, gets to decide, okay, we're going to cut rates because it's at my discretion. Yeah. She is a much bigger advocate of, instead of rates moving on a whim, having rates move strictly based on the data. Okay, here's what the numbers are coming in at. Yeah. Therefore, the rate is going up or down or staying the same. Period. So really, and it doesn't matter who's the president.
So you can kind of quantify the model.
Right, exactly. And it becomes predictable for markets, right? Markets now know, here's what the CPI came in at. Here's what the PCE price index came at. Here's what the GDP deflator came in at. And based on all those different inflation metrics and maybe more, we know that the Fed at their next meeting is going to do X, Y, or Z.
Yeah. So, I mean, honestly, that's like, obviously, I run the fund on a quant model, which is, there is room for discretion within the model, but it is a rule-based gray box. Right. So I do love that. I love that. You have to be, you have to give a reason why you broke the rule. If there's no rule in place, then you can do whatever you want. But if there's rules in place and you break the rule or you pause, that may be fine. And maybe that's part of your approach, but then you need to at least explain why, versus, Jay Powell, who's kind of, I don't know.
I mean, how many times has he been asked by reporters, inflation's low, why aren't you cutting rates? And he responds something along the lines of, well, we've made progress, we're looking for more progress. And then he gets asked, well, how much more progress, right? Quantify it for me. Yeah. So that we know where the goalpost is and we know when we can expect you to cut rates. And he won't do it. He just goes back to, well, we're just looking for more progress and we'll know what that is when we see it. Okay, sure you will.
His more progress is a guy in the White House with a D in front of his name.
Bingo.
And it's not Donald Trump. So, it's unfortunate. Moving to the markets, we have the S&P We've had a great year here. I'm actually, briefly take a second. We have formed, and we're in the middle of a cap raise now. We've formed a new LP. It's Ascalon 6 Capital. The old website for Island Capital is rolling into Ascalon 6, but it is Ascalon VI Capital. We're very happy with the performance over the past 12 months. Year-to-date performance has been fantastic. And a lot of that has been off of recognizing that we were heading into a down move in the market, regardless of the headline or the catalyst. We saw this happening back in December and January. This is the weekly chart of the S&P. We're now within 2% of an all-time high, which is great. I'm just over on my Bloomberg as we talk about it. The first move, so I'm looking at that COVID low, just to kind of zoom out and show it. Mm-hmm. Looking at basic MACD at the bottom to show some momentum, just to add some color. We're up like 180% from the COVID low, which is insane. That's that first white line on the chart. The second white line was the 2022 low. So that was as Powell started to spike rates up after he said lower forever. And we had the SVB and the regional banking issues. We had Russia invading Ukraine. Mm-hmm. That low there in 22 was marked by the AI narrative coming to life. That AI narrative, I believe, and I've said many times that AI narrative is what saved the market from going lower there. I thought that was a shallow sell-off at 27%. And then we had our rally up, a little blip. The next line, August of 24, we had a move down. That was about, I think it was about 18% down. Mm-hmm. And then we moved up to the all-time high, and we've recently had the sell-off at the end. So we're up about 28% or 24%, about 25% from the recent low. I think that was April 7th. An aggressive move down. Now we're up near all-time highs. And honestly, the market is on the short-term count for me, the daily count. We've kind of been grinding through 2 weeks here of a somewhat of a negative divergence between my model, general internals, and price. Meaning prices continue to grind up towards 6,000. It's kind of bouncing around. It's above now, but we're not seeing, we're seeing the internals, momentum, and trend indicators pausing to being slightly negative. So the next move here is going to be very telling, I think, in either direction. The support and the move up has been very unexpected for me. We did extremely well on the way down. We actually have not gotten hurt on the way up, but I was not participating on the way up, so, which is absolutely fine, because with the leverage we had in the account and the call we had, we were short S&P, we were long gold, we were long VIX volatility. The move was fine, and I considered the market to be, and I still consider the market to be in a broader high vol bear regime. But about 3 weeks ago, I did write that I'm considering the near term, the short term, to be normalized, meaning from kind of December, January through three to 4 weeks ago, I was short flat, meaning my exposure, equity exposure, would be short or flat. I was not buying any rallies. That worked out very well. We're up over 30% year to date. I'm very happy with that. I don't need to chase. I don't need to be a lunatic. The model for me now is saying it is quote unquote normalized, and we can be long, short, flat. So I can play both sides now based on the short-term count. The intermediate and longer-term counts are improving. They're not out of the woods, but they definitely improved more than I expected them to at this point. And a lot of the damage has been repaired. I still think we have some risk here, but I'm not a perma bear. I watch the model. I'm objective. I just want to make money. Whether we go up or we go down, I want to be able to make money for my investors, and we're doing that. So for here, kind of stuck in this really near all-time highs, and kind of internals are foofing a little bit. So we'll see what happens. The model for me on the daily count I put out today did shift back to negative from neutral. It's been churning in this spot, and I've been writing and continue to write that I am waiting for a more uniform, clearer signal to put on a trade. I don't need to be involved. I don't need to just throw darts. So that's not my game, and it's not what I do. So here I'm essentially flat here and just waiting for a better signal. If I miss the beginning of that move, that's fine, as long as I'm more confident in that move. So that's kind of the market for now. Interesting stuff. I think the Fed conversation is coming back to life. And then as people start to throw out these ideas of Besant potentially sliding over and what that looks like, it's creating a lot of noise. And there's a lot more going on too. I don't think we're discounting the geopolitical risks that we face. I don't think we're discounting the domestic risk that we face right now.
Mm-hmm.
We are for sure.
That's a great point.
I mean, there are economic impacts, obviously, but it's more important what's happening to our citizens, what's happening to our country. I think it's really sad to see where we've gotten. And it's not that it won't happen. It's that it's happening and it's being supported by those who have pledged allegiance to our flag and sit on Capitol Hill or sit at state and local, houses and are actually paid elected officials that are looking for this country to fail and looking for this country to implode. The policies have been horrendous. The talking points are disgusting. And you're putting our citizens, our cops, all law enforcement, our military in horrible positions, and then gaslighting and pointing the finger. So I just want to run, as we slide into the balance of what normally is the How Dumb Is segment, it's going to end up being, spoiler alert, how dumb is Newsom, because he is just off the charts, like almost programmed or possessed. I don't understand how he can say what he says with a straight face, but I have a theory. But let's take a look at what they consider, what Newsom considers to be acceptable.
The LA County Police say that they have it under control. Carrying a flag is not illegal, as you know. What did happen in 1992 was so different from what we're seeing now. I mean, that was a real riot.
Video after video has shown that these agents are the ones provoking protesters and also making up, aggression by these protesters that later video shows people were not aggressive.
We are having an administration that's targeting peaceful protests, people that are there to protest. The president is sending the National Guard because he doesn't like the scenes. He doesn't like the scenes of people peacefully protesting.
The unrest is isolated. LA is home to millions of people, most of whom are having a normal day here on Sunday.
You've heard reports that there are riots on the streets of Los Angeles. That is not what's happening across the city of Los Angeles.
Governor Newsom's right. There wasn't anything like a riot happening on Friday, Saturday.
We just witnessed a protester thanking a National Guardsman for his service here in California.
LAPD, by most estimates, had this under control last night.
No, I don't think the National Guard is needed now. Things in LA are calm. There was a protest that got a little unruly late at night.
There have been no violence where anybody that was protesting hit anybody, shot anybody, threatened anybody. Nothing has happened.
What is just a bunch of people having fun watching cars burn.
Most of those demonstrations were very peaceful. They were chanting, they were shouting. People were driving by, honking their horns.
So I just want to I just want to listen to Newsom now gaslight the American people.
Failed dictators have done in the past. Look, this isn't just about protests here in Los Angeles. When Donald Trump sought blanket authority to commandeer the National Guard, he made that order apply to every state in this nation. This is about all of us. This is about you. California may be first, but it clearly will not end here. Other states are next. Democracy is next. Democracy is under assault before our eyes. This moment we have feared has arrived. He's taking a wrecking ball to our founding fathers' historic project. 3 co-equal branches of independent government. There are no longer any checks and balances. Congress is nowhere to be found. Speaker Johnson has completely abdicated that responsibility. The rule of law has increasingly been given way to the rule of Don.
So I'm gonna go first, and I'm gonna let you finish, okay? And I have 2 things to say. The first thing to say is he's 100% right. Everything he said is right, but the names need to be changed because we are under attack. This is treasonous. The Constitution, the country is under attack, but the names are all wrong. He is absolutely spineless, clueless, and worthless, and I mean that in every way. The second thing I'm going to take an angle on is this. We have asked men and women in this country to go overseas, to live in holes in the desert, to live in the jungle, to fight and to kill for our freedoms. And now, because of their irresponsible leadership and the complete bullshit of what they're putting us through, you have taken those soldiers who have served our country and asking them to deploy into the streets with our citizens to actually take over and protect buildings within the United States of America. That is unacceptable. That is an unacceptable place to put them in. And President Trump has not put them in that position. Guys like Newsom have put that in position. And it is with a complete lack of respect and appreciation for our armed forces and what these people do for us every day that they've done that. And to gaslight and point the finger at Trump is absolutely disgusting. It's not acceptable. And until we start to hold them to account, remove them from office, and make our voices heard above this ridiculousness, they'll continue to be put in that position. We will continue to be in this position. We will continue to weaken. That is not acceptable. That's not a path for this country. It's not something that can happen. So I'll leave it to you to end, but this entire situation is absolutely disgusting and unacceptable, and it needs to change.
Amen, Reverend. I'm not sure I can add anything to that, Anthony. That was fabulous. You're spot on. It is interesting, though. It's 5 years almost to the day, I think, that CNN was running those headlines: fiery but mostly peaceful protest. Right? They've learned absolutely nothing. Well, I don't know. Maybe what they learned is they can get away with it. Right? They can get away with the gaslighting. They can get away with the lies and all the disinformation. It's all they're doing. They're just lying to the American people over and over and over again. And it's not just CNN, obviously. There's MSNBC and a bunch of others. But it really is astonishing how, if you don't see it with your own eyes, you just can't trust the take that the media has. So what do we see there with our own eyes? Well, we see a bunch of foreigners waving foreign flags in our country. That sounds like an invasion to me, doesn't it? I mean, when like when the Germans went into France both times, they brought along a bunch of flags and were waving them to signify the fact that, no, this land is ours now. Kind of feels like what's going on here. Look, if you love Mexico so much, go back to Mexico. And we are happy to take you there. We are happy to facilitate that trip, even if it's at taxpayer expense, because frankly, you're doing enough damage right now at taxpayer expense. Yep. Not just in welfare, but all the damage being done to these riots. Every time you see one of those cop cars on fire, by the way, remember that you paid for that car and you're going to pay for its replacement with your tax dollars. And okay, don't give me this nonsense about, the insurance will cover it. Okay, congratulations. You're going to pay for that too. Why do you think insurance rates are so high right now? Yes, a lot of it has to do with inflation, but the reinsurance market got just annihilated in 2020, in large part because of all the riots. Yeah. I mean, it's not an exaggeration to say that the cost of all the rioting that happened in 2020, most of that was because of all the nonsense around George Floyd. The only person who died with COVID, but not of COVID, but I digress. That actually showed up as more than a whole percentage point of GDP.
It's crazy.
For the year. I mean, these are not trivial numbers. These are tens of billions of dollars. At least what happened in 2020. And if this stays as out of hand as it is right now, and if it spreads, which they're trying to on this coming Saturday, they're trying to have nationwide protests. You're going to be looking at the same kind of financial cost, which is a real cost on American families. This is not, as you said, Anthony, and you're absolutely right. This is not acceptable in America, not financially, not socially, not culturally.
No, not at all. And those cop cars burning, it's one less cop car as well that can get to your house if you need help. So
100%. That's a great point.
To defend themselves and be ready to defend their families. I tell everybody I speak to, if you're in a real America state, I'm in PA, I have my guns and I'm more than happy to display them to anyone that thinks they're coming on my property to hurt my family. If you're not, you need a less lethal option. You need a burner in your house so that you can protect your family and not kill the intruder, but absolutely dismantle them. These are the options we have. So whether you have firearms in your house, or you're a 2A guy, if you're not a 2A guy and you want your burner available so it's less lethal, but you're protecting your family, the days of just thinking that you can lock your door and then call the cops if you need help, don't get stuck in that spot. And I feel like we're all poised for that. You're going to get stuck in a spot where all of this destruction is actually going to roll out. And as a second derivative, third derivative, you're going to have people that need help that can't get help. And that's where you need to be prepared. You need to be prepared. This is not okay. But I'm very happy that we have a man named Donald J. Trump in office. The leadership is there. We just got to take it on. Take it on, fix it, and keep it moving. EJ, always a pleasure. I really appreciate the time. You are a fantastic co-host, and I appreciate you very much, man. The insight is just amazing.
Right back at you, Anthony. The pleasure is all mine.
Thank you, buddy.